Yo, what's good, YouTube? It's your boy Brandon back at it again with another video. Today we're doing something very different. We're gonna go over support and resistance lines on TradingView. For those of you who don't know, I'm a part of a trading club called Funded Boys, and our goal is to have as many traders on board learning how to trade and things of that nature, right? So first things first, let's go over number one. Number one is, okay, so what it says here: support and resistance zones act as a barrier where price moves to. When price moves to these areas, price may pause, stop, or reverse. I'll show you an example later in the video, but let's just focus on our key task. So you have like a certain plan of what to follow throughout the video. Anyways, traders normally use these levels to predict future moves and make informed trading decisions. Mind you, keep in mind I'll go over all of these in further depth later on in the video. Number three, identify levels. Look for previous highs and lows to find significant support and resistance levels. Number four, mark on chart. Draw horizontal lines on your chart to indicate these levels. Number five, watch for price action. Monitor price movements near these levels for buys or sells. Number six, set stop losses. Place stop losses below support levels for long trades, meaning buy, or above resistant levels for shorts, meaning sells. Number seven, target breakouts. Trade long when a stock or commodity breaks resistance, or short into a break of support. I'll go over this later in the video. And then our goal is to match the use of support and resistance lines while we trade. In this video, I'm also going to go over my strategy. I haven't really been trading for that long, but I've been investing for over a year now. You can say that. Mind you, to the average human being, this looks like Japanese, right? Like you don't know what you're looking at, right? So let's go over this. It's kind of hard for me to delete all of this because, okay, so where do we start? Number one, support and resistance zones are barriers where price moves to. So this down here would be a support. Give me 1 second. Just gotta fact check that. Okay, cool. So yes, this right here would also be known as the floor of the structure of the building that you're, the floor of the building you're building, if that makes sense, right? Let's label this support. Right, now resistance would be the top of the structure, would be the roof, meaning this right here, right? Resistance. And what do we notice when the market hits these zones? Tends to have a little shift of momentum, either to the upside or the downside. For example, it hits a resistance zone. What it do? Shot down, right? Y'all following what I'm putting down? What did it do when it hit support? Went down, wicked, and went up, right? As you can see, we're in a uptrend right now. You see that? Okay, now that that's out the way, let me remove all of this right here. Okay. Excuse me. Now number two. Mind you, this is a simplified version. This is my own words, right? Everybody learns differently, but I feel like this really would help you out a lot. Number two, Traders normally use these levels to predict future moves and make informed trading decisions. Now let's go over that, right? So if we're a trader, right, we're a day trader, and we're going into the market, like say, because today's Friday, 4:11 p.m. Central Time. So the market's already closed. The market's open back up on Sunday at 5, right? So what I would do as a day trader, right, I'd make my lines, right? I'd look at what the market did from Monday to Friday. Now we all know right here. Look, if you can go down here, you can see that the times and stuff like that. Go down here. Sunday opens up, and then this is Friday. So what I what I will go ahead and go. Jesus Christ. So excuse me. Back to what I was saying. I label out my time zones. So let's start at Sunday the 7th at what's that? 1900. Cool. Then we're gonna go ahead and label out Monday. Boom. Right? And I'll show you guys what the importance of this is. And then we go Tuesday. Holy. Boom. We go Wednesday. Boom. We go Thursday. Just so y'all know, these videos are gonna come out every Friday. God willing. And if there's anything y'all want to know, excuse me, yeah, just let me know. Friday. Let's go Friday at 1600. Cool. So you will come here, label all your time frames, your days, and things of that nature. So this is Monday, Tuesday, Wednesday, Thursday, Friday. Let me just label this out so it's easier for you guys to understand what you're looking at. Monday, well, Tuesday, Wednesday, Thursday, Friday. Hold on. Friday. Now these are, as you know, all days of the week, right? Hold on, let me fix that. Thursday, so y'all don't get confused. Right? Why, you may ask me why I do this? Because this helps me. Let's say, for example, the market does this, goes down, goes up, and going into Tuesday, it makes a higher high, and then Tuesday it retests to this level, and then Wednesday, what do we want to do? We either want to break this right here, or break to the upside, right? So what I do is I use these days, Jesus Christ. So with all of that being said, this is to help you out on what the market did that day. And if we go back on my chart, I'm gonna show you what I'm talking about. So look, go here, path. So I know this is Monday, Tuesday, Wednesday, Thursday, Friday, as we know, right? So going into Monday, what did the market do? Created a higher high, consolidated, and then going into Thursday, boom, it broke the previous high that we just had. Now going into Friday, what did the market do? Go down, right? And as a day trader, this is very important, well, to my strategy, because obviously the market can't just shoot to the moon, right? It has different variation, whether it goes up or down, right? So playing into what we were talking about, I didn't do it for this week. I didn't trade this week at all, right? Playing into this week, moving forward, using the same logic we just did, right? We know, okay, this is the previous highest high, right? And then I'm gonna show you. I'm gonna amaze y'all real quick. Let's go to number 3. Identify levels. Look for previous highs and lows to find significant support and resistance levels. Right. Obviously, overall, this is the resistance. Right. This is the top of the top of the top. Right. Like you ever seen that Dubai building? Think about this as a Dubai building, all the way in the top, and then think about this like the let's say the building has 100 floors. This is like the 50th floor, right? And this is the 100th floor. This is the top of the top, right? Now, where we at right now? We're still at the 50th floor, right? Now, we're gonna go ahead and label out our resistance coming into the new week, right? Coming into the new week, our resistance zone would be this right here. Why? Because, like we said again, look for previous highs and lows to find significant support and resistance levels. So coming into the market for this week, I look at it like this. Boom. I seen that 2 weeks ago. Mind you, this is like foreshadowing to this week. Excuse me. This is a foreshadow to what's gonna happen in this week, right? I look at it. Okay, boom. This is where the market hit and pivoted 2 weeks ago. So this would be labeled as a higher high, right? Boom. And then this is also known as resistance. Cool. Now, what does this do for me? It tells me, because if you see here, it's either gonna break these levels, because as you can see, the market has bounced off of these levels 3 times. 1, 2, and 3, right? So what does this tell me? Going into the new week, I may be looking for something like this. Look, so we're pretty high right now, right? If it would have broke, it would have broke, right? What I'm trying to see right now is come down here, retest to this area, because as you can see, this is where it broke previous structure, as is right here, because this is when it broke structure, but then it consolidated and then retested, and then hold on, boom, we go down. This is what I'm looking to the previous break of structure, to then maybe hitting this right here, doing one of these, and then going up into Wednesday, right? So ideally what I'm looking for is the pullback to this zone right here. And you may ask, Brandon, why do you know that? How do you know, or why are you so certain, right? Because if we look back, we're gonna now label our support lines, right? So just by looking at this, right, I can already tell, boom, that's our support. Remember, support and resistance are zones that act as barriers where price moves to, right? And when price moves to these areas, price may pause, stop, or reverse, right? So boom, let's look at it like this. Now there's a lot of other things that play a factor, but we're only going to how to identify support and resistance lines, right? So this would be your floor, boom, support, boom, right? Cool. This would be higher high. This would be a lower low. or a higher low, but it's still lower. It's still low. Should be a higher low. Although it's a higher low, it's still a low, right? And then we can go here. We can even label these right here, another support. And it's always important to have more than one or two support lines, because these zones, like you would tell, like, for example, like, how do I explain this? Um, okay, think about it like a water jug, right? If it has a hole, right, it's just gonna keep leaking, right? And think about it like that in the market, right? So, boom, right? Let's say if it does this, goes up, goes down, whatever, hits this, right? This will tell you, is price gonna stop, reverse, or go back up? Reversing meaning go up, or is it gonna just continue breaking the zone? If it breaks the zone, we're leaking, right? We're leaking, we're leaking, we're leaking, leaking, we're leaking, 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 right? So that's why if it's leaking here, you wanna have another zone. Hold on, what the hell am I doing again? Okay. That's why if it's leaking here, you wanna see what it does. Is it gonna leak further, or is it gonna patch itself up? You know what I'm saying? Now, this is important as well, because the market can also break this support line, right? You never know what can happen in the market, right? It's unpredictable. Us as day traders, we just, learn how to analyze it and try and, take an educated guess. So that's that, right? Now that I labeled the support and resistance lines, let's go ahead and talk about. Okay, we identified the previous highs and previous lows. This is the previous low, this is the previous high. Going into the next week, we know that if it breaks any of these zones, we're looking for a sell, right? Even if it breaks this 50% mark right here, we're looking for a sell, right? Excuse me. Excuse me. Because if you can see the overall picture, we're bullish as hell, right? Like, don't get me wrong, we're bullish as hell, right? We came down here, boom, 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 boom. Now what it's looking to me like it's gonna do something like this. Boom, 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 and then shoot up, right? Maybe even break these previous highs, right? It's always good to look at the bigger picture of things, because you don't know, you never know what's happening, right? Like, look how much this has gone up, right? Now that we identified the previous highs and the previous lows, and previous supports and resistance lines could be considered the same thing sometimes, depending on what you're looking at. Let's go ahead and did we already do this? Mark up the chart, draw horizontal lines, and indicate these levels. These levels are like from previous trading sessions, so I'm gonna just delete these and do it so y'all can understand and see what I'm looking at. I say horizontal lines. Alright, we back, chat. So we go horizontal lines. These boxes you could use it as well, just cause you want to see. Cause if you go zoom in, you want to see what prices. If you go down to the 5-minute time frame, you want to see what price. Oh, hold on. I got 2020, but I can't see that much. You just want to see what price does in these zones, right? Like, yes, it could touch these zones, but you want to see what it does. Like, for example, right here, created a high, created another high, right? And then created 3 highs. and then what it do? Went down, right? And then like you want to play off these lows as well. Like for example, this one broke right here. You know, it's a lot that plays into a factor, right? Excuse me. Let's go back to the hour. Okay, I'm trying to get it back to where it was. Alright, I think I got it. Wait. Who's calling me? Oh my god. Hold on, chat. Alright, chat. I had to take that phone call. Alright. I think this is how I had it. Alright, anyways. Draw horizontal lines. We were on 4 horizontal lines. Boom. One right here. Another one down here. And then you don't want to draw a horizontal line for everything, because then it's just gonna look like a loose leaf paper, right? So where's it at? Horizontal line. You know, you just want to identify certain points in the market, like for example these, right? And if you can see, it's kind of like a structure, right? Give me a second. Hold on. It's a structure, right? Between this range and this range. Hold on. It's a structure, right? So, with that being said, market structure. Let's talk about market structure for a little bit. I'm deviating from what we're talking about, but this is also important for you guys to learn. This is called the Fibonacci sequence. What this does is it helps you identify the 50% of the market. Right? Remember when I said, I think it's going to drop down to the 50%? Why? Well, Brandon, you may ask, why do you think it's going to drop down to the 50%? Because if you see here, look, this is what we're looking at. Direct your attention to this line. The 50% is the 0.5 range, right? If we look in the market, what it do when it hit the 50%? It went down, went up, boom, and it broke structure on that 50% mark, right? So going back into the week, that's what I think it's gonna do. It's gonna hit this mark and then shoot up, right? Let's get rid of this. This is an important tool to know. If y'all want, I could give y'all the insight on that. Boom. So this is, you see what I'm saying? It went up. This is the 50%, right? So what I'm saying is I think it's gonna come down here and then shoot up, right? So from where we're currently at, well, you never know, because, you know, when the market opens, it tends to do some crazy stuff. So it might even reach this down here, reach this level, reach the 71 or 78%. But ideally, guys, I'd want it to see hit this to then, remember, like I said, buy long to then that break of support or break of resistance. Keep pausing, that's my fault. What I'm gonna do for you guys is, I know this video is 24 minutes long, and a lot of viewers don't tend to watch my videos like that, or just longer videos in general. What I'll do is I'm gonna release this today, maybe about tonight, and then maybe next week around Wednesday, Thursday, or Friday, I'll make smaller sections on these points, key points. But as you can see, I drew my horizontal lines to identify the resistance and support. I drew out the zones, 50% to 71%, right? I labeled out my chart for next week. I labeled out the highest resistance zone and the lowest support. What's another thing? Number 5, watch for price action, monitor price movements near these levels for buys or sells. Normally, that plays an indicator. That plays a factor in when the market's actually live. Because right now we're not live, we can't really see what it does, but we can go in the past. Excuse me. And look at what price did near these support and resistance lines. So near this support, price bounced up. Near this support, price bounced up. And that's not always the case, right? I'm just giving you examples. Near this resistance zone, the price went down. Look, as you can see, it didn't hit this. Near this resistance zone, price went down. And then as you can tell right here, this is I don't know, but I want to tell you, look, this would be a support zone, and what did price do? It broke that support. So support can always be broken, just like resistance can be broken. And to sum it all up, number 6, set stop losses. Place stop losses below support levels for long trades, and and above resistance levels for shorts, right? So this is how we're going to the market. You will set your stop loss. You never want to risk. Ideally, Warren Buffett said you don't want to risk more than 1 or 2% of your investment of your money, right? But trading is different, right? Because you're trading the money, whatever, right? Long position. Let's say I take a long from here. Target price would be targeting these highs right here, right? This high, all these highs, right? My stop loss, let's say I go in with a lot size of $100. I'm risking $25, right? Reason why I'm risking $25 is because I'm making 130, right? And I'm losing 25 if I lose, right? So my stop loss is set to 25 because if you do the times tables on that, 25, I don't even have to just common math. 4 times 25 is 100, right? So rather than you losing all your trades in one day, blowing your account in one day, what you have, right? Let's say you take this trade on Monday and you lose 25. Excuse me, hold on. Let's say you take a trade on Monday, you lose 25, right? And your account size is $100. You then have another $25 to lose here. Well, not to lose, but you get what I'm saying. You have money to play with throughout the week. You don't want to just get going with $500 and you want to freaking lose $350. That makes no sense financially. That makes no type of sense, right? Now moving forward. So long story short, you want to target zones in the market where you're okay with taking out money and profits, and then you want to set your stop loss to the money that you're okay with losing, right? So let's say you have $100, you're okay with losing 5, 10, 15, maybe 20, right? That's just you, right? It depends on all your capital. Now we go ahead and 7, target breakouts, trade long when a stock or commodity breaks resistance, or short into a break of support. So this is a long. This is what you be considered a long, right? When you're going to the upside, target the upside. So this would be a support, right? And what would you do? You would trade into a short, right? Ideally, I wouldn't go into the market right now because it could just reverse and then liquidate me, right? That's another term. Boom, right? I'd set my stop loss to the breakup, to the resistance, and then I'd set my TP to the support, maybe even down here, right? You never know. So that's a short. A short is basically you're making money going down, and then a long is basically you're making money going up, right? And that about sums it up. Ideally, I wish I had all the time in the world to explain this to you, but I understand how boring something can be when it's just yapping. But what I'll do for you guys is I'll make individual videos, shorter videos, like maybe 10 to 15 minutes, 20 max, on all of these, so y'all really grasp the information, because I know it's a burden to watch a 30-minute video, 40, 50, maybe even like an hour. Sometimes I'm not gonna lie, I go out my way and watch them, cause I want to be knowledgeable, and like I don't know, sometimes it's just people who have money and things of that nature. But anyways, that'd be it for today. I hope that y'all got some knowledge from this video, and if I'll see y'all in the next. Like, comment, subscribe. Stay tuned for more. Like I said, I want to make this a consistent thing, not just a one-day thing. And the goal is to master the use of support and resistance lines, right? Let me know if y'all had any trouble understanding. I'll go slower next time, and but peace.